My entire focus, and this goes back to late 2015, was growth. Growth, okay? And in particular, as the president, then candidate, instructed us, it had to be a strong middle-class tax cut, which it is. The doubling of the standard deduction is very important. And here's the key link,
But the campaign stuff, Larry, had a lot of goodies for the wealthy in terms of, it was scored very highly in terms of the provisions it provided to the wealthy. And
well, we always had, there was always an issue of the state and local deduction, okay, which is really, that will hurt the wealthy, by the way, and other deductions.
Right.
Now, they may have income limits and brackets on that. We don't know. But the two things here, Steve, again, doubling the standard deduction is huge.
Big.
That means basically as much as 85% plus will not pay any deductions, none of that. The second point is that lowering the business tax rate, okay, whether it's a large company or a small company, benefits working folks, wage earners, and the middle class the most. And that was the key to the whole argument
a suspect
that
argument,
I have
Larry.
made for 15 months.
Larry, that's a suspect argument. I think you have to.
There's a lot of data, research papers, Steve. You may not buy it, but there's all kinds of stuff out there that supports it.
There's a single research paper that suggests that workers pay 70% of the corporate tax. Before that, the Joint Tax Committee and a lot of other folks argued that it was mostly paid by shareholders, and in addition to hiring. So there's a question as to whether or not
that doesn't mean they're right.
No, that's right. That's right. And I think there's been some movement. There's been some movement to suggest that indeed workers do bear some share of that, but I think ultimately the bulk of it is probably borne by shareholders.
I do not believe that for a moment. I think the range right now, if you look at Aparna Mathur from AEI, her latest paper, she was Kevin Hassett's sidekick.
Right.
Kevin's now the chairman of the CEA. 10, 12 years ago, they first did their paper and said the biggest beneficiaries go to the middle class. That was very controversial in the economics profession. I get that. However, over the last 10 years, peer-reviewed paper have shown that the range is probably benefiting the middle incomes by 45% to 75%. And the CBO actually now has that in their own documentation. So we can argue, but I'm just going to say this was my intent. This was Steve Moore's intent. This was Mr. Mnuchin's intent. And it was also the president's intent.
I have one other issue, which is the politics of this, Larry. If you look at, for example, the corporate profit margin today, companies are doing quite well. Shareholders are doing quite well. The argument, I get the argument for a simplified corporate tax. I get the argument for a more competitive tax. But if you look just at the corporate profit margin, these are practically historic times. How do you come forward and say, you know what we really need in this country is a lower tax rate for companies, given that companies are doing so well?
All right, so you've got three issues running here. We consider this. They are not reinvesting those profits into long-term investment. And the prior administration, I'm going to be very blunt, prior administration was waging war on business. And they did not want to invest, 10, 12-year projects. This was a huge thing. You go to any business roundtable, you go to any business council meetings, you go to the small businesses, the FNIB, they're saying it's the biggest barrier. They want to see.
If this is what happens when an administration wages war on business, shouldn't they want war all the time? I mean, look at the markets and look at the profit levels. Come on.
The two don't look. When it comes to making a long-term investment, the profit margins don't necessarily jive.
But neither do the tax rates,
the
Larry.
incidence of making investment. Well, look, you can make that case,
tax rates are sort
Steve.
of incidental. Can I make one more point, Larry? I want to.
Incentives matter, Steve. I'm going to argue this. The whole economics profession has shifted towards an incentive-oriented model. And the older thing is the repatriation.
I don't want this segment to end
is huge.
Without quoting the Wall Street Journal story today, op-ed today, from the chair and CEO of MetLife. And I want to bring this up. What Steve Kandarian said is if every company in the industry views its tax preferences as sacred, reform will be impossible. The broader goal of lower tax rates and faster economic growth transcended short-term corporate self-interest. This gets right at the political battle that's coming. Here's another thing. The instinct for self-preservation tells business leaders to defend our preferences at all costs, but enlightened self-interest shows putting the good of the... And what this is about, Larry, it's about the battle that's coming. And the battle that's coming is every single self-interest, every lobby group against this idea of tax reform.
I love the idea of enlightened self-interest. I've always loved that, going way back to when I first met Adam Smith in the late 18th century. I think he had it right then.
Wasn't there a show, Kudlow and Smith?
We had Kudlow and Smith. Now,
I was a guest on that show.
Self-interest is wonderful, but these guys, look, I give up the loopholes. You ask me, I go for a 20% flat tax rate for all individuals, no preferences. I would abolish the corporate tax, no preferences. Unfortunately, I can't wave a magic wand. But these very same CEOs are very much in favor of the Trump business tax plan, and maybe more to the point, the smaller companies, 500 and less, the lack of new business startups. You got to have a lower rate. That's the incentive. They'll put money to work if they see the law. You got to have expensing. You're going to get 100% expensing. That's huge for 5 years. And finally, the repatriation. We're going to move to a territorial system, which is very beneficial to the American economy. And this was the heart of the Trump plan that we wrote. It was always the heart of it. And we added on a doubling of the standard deduction, which is a direct hit in favor of middle-class people.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.